Okay, folks, welcome back. All right, so we have the dollar index. This is our daily chart. And as I mentioned last week, I said that we would watch this level here as a mean threshold of the bullish order block. And we want to see an attempt to get down to that level. That was a near-term draw. But if we saw a single candle come down and come back and wick and close above the order block, it would most likely spell a bullishness going into this week. Well, here it is. It's Wednesday. And I said that we would probably revisit this old high and close up some of this inefficiency. We have done that. So the market today was internally bullish for the day. Now, I'm not convinced that this is going to maintain itself. And by that, I mean, remember, I was showing you how if you connect all these levels here, it looks like a perfect trend line. And I'm just really not trusting that at all. So tomorrow, remember, we have the economic calendar suggesting high probability for volatility off the charts because of ECB. Okay, so be very, very careful. If you're going to be trading, just be mindful that you're probably going to be standing in front of a bus, okay, or a train, okay, and you don't want to be doing that if you don't know what you're doing. So if you're practicing tomorrow and you're using the ECB as a means of the study itself, if you're wrong about what happens, again, it's not meant. You shouldn't be trading the ECB. You're learning how to trade, so that shouldn't happen at all. But don't also, if you get it right, don't think that you're really smart either, because it could easily go against you. Now, how do we use tomorrow as an example to practice in? Wait for the ECB announcement. Wait 30 minutes for it, and then look for fair value gaps and stop runs. Okay, and then you can practice there. There will be a lot of momentum and movement in the marketplace, and there'll be inefficiencies that they'll want to fill in, okay, and or run on liquidity. So you can practice all of that. But again, 30 minutes after. Now, just for sake of disclosure, I have Thursday and Friday left for my week on Twitter. So I'm trying to run the account up to 120,000. So I'm going to try to do whatever I can tomorrow. If I can do it tomorrow, I'm going to absolutely try my best to get it done, because I don't want to do anything Friday. I'll have a long weekend. But if I can't, then obviously Friday I'll have to do whatever I got to do to get to 120. I'm not doing any more of the daily updates because I think if I stopped right now, it's enough. In my opinion, I think it's enough. But I have a goal. I want to hit 120, and that'll clear all of my personal goals from a social media standpoint. And then I'll just quietly just run it up the rest of the year, and I'll share it with you all on Twitter on December 31st. But because of the bullishness in here on the dollar index, and we had this level here, everything that I outlined happened. Okay, so if you're new, okay, if you're in month 2, just go back and listen to those videos again, because everything I gave you in terms of scenario, what it should look like, where it will go afterwards. Okay, in terms of prognostication, it's to script. So it's not that you're learning how to gamble. Okay, you can turn it into gambling if you want. If you want to trade all the time and over leverage everything you're doing, then it's gambling. But we're making very educated investments in terms of where price action's going. Okay, we're investing our attention span. We're investing our hopes that you're going to learn how to do this consistently. And if I haven't communicated it to you enough yet, okay, just wait. You'll see that this repeats over and over and over again. Now, this one singular day here is enough to warrant your weekly objective. That's it. Just one of those is enough. It sets the catalyst in motion that we would be looking for a bullish or bearish model to unfold. Either in this case, we were looking for the dollar to want to return back to this high here. I noticed that a lot of you were caught off guard with this. And again, you have to take notes when I'm telling you certain things are going to take place in the marketplace on the weekly reviews. I give you the very specifics. Okay, and now in the last video I did, I gave you the actual markers by time, so you can actually go and scrub the video to that specific time and hear me say those very things. I'm not doing it anymore. Okay, this is the things that you're supposed to be doing on your own. You need to be listening, not just simply watching the video and listen to me drone on about what I believe is going to happen. If I say a specific thing, write it down and the context around it. Okay, for instance, when we get to cable, I'll talk about a specific level that I haven't lost interest in. I just want to see what we do. Okay, and ECB may change a whole lot. So, do we trade down to this mean threshold tomorrow on the heels of the ECB? Or do we make a run and then challenge the rejection block here, the body of this candle here, or the old high? Or do we stay inside the range defined by this old high and this low? I don't know that. And I won't really know it until about 30 minutes before ECB. I'll look at what the liquidity looks like on the euro at that time, and I'll just have a better feel for it. I don't have it now because there's a lot of things can happen between now, overnight, and leading up into tomorrow's New York session. So I will be very interested to be trading the euro tomorrow, and hopefully we get some kind of a scenario we can practice in. Here's the euro. I did some shorts in this, and you probably watched the YouTube video, and I covered a lot about the cable market, and I'll fill in the gaps that wasn't presented there. But if you look at a 15-minute time frame, you can see we have a BISI in here, buy side imbalance, sell side inefficiency. That's one single candle. Let me zoom in, and I'll go one more time. So you have one single candle here where it moved up, and inside that little range where one single candle passed on the upside, we want to see price come down and rebalance. All of this price structure here, once it started the rally, all of this is being supported all of this price action is being held up by this one single candle. Okay? Too much weight, and it's going to break and come back down and fill in that little area. And it did that and returned back to a bullish order block, ran equal lows. All of this is the mirror image of what we would expect to see in the dollar index. So in here, we're going to zoom back in and look at the start of the day. All right, so we had in Asia, we ran up, ran out buy stops, dropped a little bit lower, came back up one more time, just bumped the high. The high here, 110.54, and the high here is 110.55. That's all it takes to upset, because that wick is going to be different across all brokerage firms. Whatever your liquidity pool is through your broker, that's how far the wick will go, because everybody's orders are going to be slightly different, and their wick on all of their platforms on different brokerage. For instance, you may have, I mentioned this before in previous lessons, where you have live account server 122, live account server 124, 126, and so on. Why can't they just put it all in one? Because they're going to go after the liquidity that's available in these smaller pools of liquidity. Okay, and you can get mad at it all you want. It doesn't change anything. Okay, you're not going to change the industry because you're getting angry. You just have to be mindful that that's what's most likely going to happen. So you have to be aware of how much they may wick it through. Now, obviously, this candle's high shouldn't be like running up above here. If you see that on your charts, then you probably have a really bad broker and you need to get out of there. But running this old high here, yeah, could it happen? Yeah, I would still probably want to leave them if they're running this high here. Now, if they're running this one here with a variance of 5 pips or 7 pips, to me, it stinks, but unfortunately, that's about normal. Once we had that run here, price broke down and created a fair value gap. Now I'm going to zoom in and see multiple areas where I participated today. Now, hopefully you guys can allow me the liberty, okay, I think I've earned it, to tell you what I've done. Now, I know some of you want to sit down and watch me go over the whole entire thing and fine-tooth comb everything I'm doing in that account. I'm not doing that. And I never promised that. Okay, so don't get upset and don't send me emails and don't send me any tweets, because all you're going to do is offend me because I told you nothing about or promised to do that at all. I'm giving you the ideas that were in my mind at the time and why I executed. Okay. The market showed displacement. We broke below this low here and created a fair value gap. Market came right in there. I sold short. This was the only drawdown I absorbed, and then the market rolled lower. Create a small little consolidation in here. No imbalance to work with. It's just expansion on the downside. Small little fair value gap that just recently traded into it here. In a lower 5-minute time frame, you're going to see the fair value gap in here that I went short on, and I went short on a fair value gap in here as well for the final rundown into the order block. And let's do that now. I will highlight the areas here so you can see inside of these ranges. And the other one is in here. We have this candle's low and this candle's high. That was the fair value gap I traded on, and my stop was above this high here. So I had a little bit of heat on me here, not much. It wasn't very much at all, about 3.5, 4 pips at most, and then rolled over into the objective. Now, this in itself is enough for your weekly haul. It's hard to believe that this is all you would need, because you look at all this and you think, man, I want to have all that. But you only need this movement here to run into the order block. That's a model. That's a setup. We have a volume imbalance in here. I was almost tempted to get in here, but we were so close to the order block, it wasn't worth taking the new entry on. But notice there's no bodies in here. It's just the wicks. Rebalance and then slammed into the order block. Okay. There was a fair value gap in here that I watched but did not participate in. That would have been another area. I could have went and you could have went, but I didn't. And I just kept adding. So that was the largest position I had. And then that last portion today on the dollar CAD, which I'll look at in a minute. We go out to a hourly chart. I want you to look at the BISI that's here, very clear. We traded down into that, so price was drawn out of this range down. Why did it have this movement? Because of the bullishness of the dollar index. So if the dollar index was bullish relative to its daily chart, let's go back for a minute. We were in here. Yesterday we had a small inside day. Inside day is a day that has a high that was lower than the previous day's high, and the low is higher than the previous day's low. So it's a very small little range. Okay, when that happens, usually there's a volatility expansion where it just moves, has a very large range, or it begins a series of large range days. We have the large range day appear after the inside day. Okay, this is something that Larry Williams taught a lot about, and Toby Crable, he has a book, Trading the Opening Range Breakout or something like that. Really old book. It's hard to get your hands on. It's very expensive, but you can find PDF files of it on the internet. It talks about narrow range days too, and smallest range in the last 7 days. All those things were also talked about in Street Smart's book by Linda Rasch and Larry Connors, which I do believe still is a essential read for traders. You can get that on Amazon. And they've dropped the price from $175. I think it's like 100, and don't quote me, I think it's like $120 now. But again, it's really, really good because it talks about a lot of specific signatures that repeat in price action, not IPTA signatures, but signatures nonetheless, the things that are very generic about how price usually moves. So we had a lot of factors here leading to this area here. We also have a breaker, this movement here, and then going lower. Here's another breaker, so that's another level. Should this roll down? Okay, in other words, say we get that dollar to continue going higher. Well, this could roll over, and the next area we're watching is this breaker here. It's this specific candle here, the high. So at 109.75. So that's the next downside level that I'd be interested in going forward. And it's also overlapping with this down close candle, which is a bullish order block. Should that break and give way, the relative equal lows would be the next draw. I am not convinced at this moment that we have made the high of the week yet because of ECB. ECB and FOMC, those weeks, I just don't trust my weekly high and low. I'm always flexible in allowing the market to show me that that hasn't been the case, and they're going to make a higher high or a lower low for the week. So I think this is a very suspect high at the moment. Now, obviously what changes that is what we see in the marketplace tomorrow ahead of ECB, and then right as ECB is announced. But downside, okay, I'm looking at this breaker. On the upside, I'm looking above this high. So even though we've traded lower, this is nothing. Okay, this is absolutely nothing. This could be completely eviscerated and blown out on the upside if they wanted to. So just be mindful. It can do a whole lot of movement really, really fast. And if you're in the wrong side and get offside on the marketplace, it can be painful. Cable, I'm going to zoom in here, leaving everything that I gave by way of the YouTube video. And the only things I'm going to pull out here is what makes this a bearish order block. Obviously, it's the imbalance here. We have this candle's high right here, and this candle's low right there. So the market comes back up, fills that in. There's your sell. That's your high probability bearish order block sell, and then rolls over. We have another fair value gap in here, and you can actually see me trading this one. Okay, you watch me trade it live inside this fair value gap. It trades up into it. I went short there, and it's expanded down. And I went through the whole business of explaining all that. This is a fair value gap in here. This candle's low, and this candle's high. That's what I actually traded on. But it was also a confluence of the breaker. So because of free level member students, it's worthwhile to mention that for them. It's their cookie. But what made it a high probability is the imbalance here, that fair value gap. And that was why I went short there. Everything was remains the same in terms of the downside objectives, the order blocks and the liquidity pools. And the return back up into here was simply the fact that we don't have any bodies. Okay, this is a volume imbalance. That fair value gap, even though we spiked up through, well, how did I know, ICT, how did you know it was going to come back up here and sell off again for a retest? Because of the volume imbalance. Okay, even though we had this here, it left it very thin. This happened real quick. It didn't stay there very long and came down and closed. Never went back up in there again. So this area in here creates a volume imbalance because of there's a lack of any bodies. Even though it doesn't create a body here, it trades up into it again multiple times. So that was the catalyst for that, not returning back to this one and also trading above the breaker. Now here's the thing that the new students and those of you who have been here for a couple months will or should appreciate. If this was all just simple support and resistance, because if I show these things on YouTube, I guarantee you there's going to be somebody in the comment section. They're going to say it's simple support and resistance. This is nothing. Okay. The problem with that is which levels down here are you going to put your horizontal line on and say that's the support turn resistance? Because it's spiking through all here. I'm giving you the reasons why it's going up here that support and resistance doesn't. You actually see me executing on these ideas when I show you the videos and how much precision is behind it. You get responsiveness. Boom. I get in, and it's boom, the market goes in my favor. I get in, boom, the market moves in my favor. That's because I understand how IPTA is going to reprice. It's not support and resistance. Support and resistance is too myopic. It's too ambiguous. It's too wishy-washy. You don't know which level, and that's what separates what I'm doing and supply and demand, because those things are dealing with zones and a multitude of specific levels. Because if you look at this low here and price broke below it, why did it go all the way up to here? And why didn't it stop at this level when it came up to here? It went through it and then jammed all the way through it again. What's going on? It's order flow. The market's wanting to rebalance to run an efficiently delivered market. Has nothing to do with support and resistance, has nothing to do with supply and demand. The market is going back to these levels to reprice for fair value. That's it. Then it expands and seeks liquidity. external range liquidity. So this is internal range liquidity, this is internal range liquidity, this is internal range liquidity. Runs down to external range liquidity. External range liquidity rests below here. Okay? What's the other one here? Dollar CAD. Earlier, before I started the recording, I had put this vertical line in here. And I went away from the charts and came back and saw that blue line. And right away, I was like, whoa, this thing just took off. You ever have that happen? My wife was like, what are you talking about? What's wrong with you? You're getting all excited. I said, I missed a move in dollar CAD. I don't know what happened. I'm getting old, folks. Okay, I'm getting really old, and it's catching up to me. But nonetheless, let's go in here and take a look at this imbalance here. Okay, big drop. Let me zoom in here. All right, so we have this drop in here. So all of this SIBI, sell side imbalance, buy side inefficiency. So inside this shaded area, which I'll flesh out a little bit more when we go into other time frames, but this is the main focus here. The market runs completely up into that. I mentioned on Twitter, and you also know because of the market review last weekend, that we knew that today we would see crude oil inventories, and this would affect the dollar CAD pair. Okay, so think about what was going on before the dollar CAD's news driver, which was, again, the crude oil inventories at 10:30 a.m. New York time. Dollar was bullish. We already arrived at that last week based on what I mentioned in those videos. That means that the dollar CAD has a real easy path ahead of it going higher. Then throw in the mix of the volatility injection that occurs at 10:30 when the inventory numbers came out. We're going to zoom in this area here, but just be mindful that we have a liquidity pool above here, and we have the imbalance in here, and we have the breaker in here. So all of these down close candles runs ahead of this high, taking out this old high. We went right back into that breaker. Buy side liquidity pool here. We're going to look inside here. So we're going to drop down into a 5-minute chart. Here is that 10:30 hour. Okay. And the market expands up into that, produces a premium, runs buy side liquidity, and then reprices down to fair value. Fair value is the bullish order block, not fair value gap. It's going back down into fair value. Midpoint of this consolidation. Watch what happens. We have the high to low. We can put it on there so you guys, you're not really putting it on the high, Michael. You're making it form fitted. All right, so here's equilibrium. So it's gravitating back to that. Fair value is midpoint, okay, or equilibrium. And then this candle's high right there. The high is 131.502. Okay. The low on this candle comes in at 131.502. Perfect. Expands to the upside. And I only used the 131.80 level to collapse my position. And I built up. I bought here. I bought on this order block here. And then as it rallied into here, I collapsed it. Now, I had to leave, and I did a lot of my jawboning on Twitter as I was riding with my wife to get some lunch. And I was watching this thing tear off, and I could have easily, this alone right here would have put me over 110,000. If I just would have held what I had, that would have been $110,000 in the account. Done. And then I would just had to make $10,000 between tomorrow and Friday, and I'd hit my weekly goal. But it is what it is. Now, what about this high up here? And apart from the breaker, apart from the imbalance that we just outlined on the higher time frame, if we go to the 15-minute time frame again, look at the market structure here. Okay, we have this high to low, high to low. I expand this up, so I'm putting the equilibrium level or 50 level of the fib. Now, again, I'm not Fibonacci trading. I'm just showing you because the Fibonacci is a beautiful tool to show midpoints of things. That's what I'm showing you here. This low to this high is equilibrium to the low of the fib. So I'm suggesting to look at what happens once this high is taken out. This move from high to low is duplicated when this high is broken all the way up to here. Okay, and that's also that 131.80 level. That's why I was choosing 131.80 as my limits to exit. And you watch those orders actually pan out, and then the equity changes real time in the Twitter recording, and it's 101,957 or something like that. All right, so again, I didn't ride that out for the buy stop on liquidity pool. Real life got in the way. It is what it is. I'm not complaining about my results thus far, and anybody that would be silly. Last bit of business, crude oil inventories. So obviously that we mentioned that it would be impactful to dollar CAD, but what other market? And this is probably a silly question to ask because you already know where I'm going with it. The crude oil market, right? It's going to go over to that one now. So here's the premium they built into crude oil yesterday, and then we had a little bit of a decline, which created an imbalance in here. I'm going to zoom in. All right, so now this is all hindsight. I didn't talk about this, but I actually did some trading in this in my own accounts today. Oh, you should have told us, Michael. This isn't fair. I know what some of you are probably thinking. Listen, I have objectives too, and I don't want you to piggyback on everything. You're supposed to be learning how to do this in the things I talk about. For examples, let me put this in a different color here. Let's do that. All right, so this low, and we're going to go down to this high right there. Let me put on the right candles. There. Okay, so the market creates a SIBI, sell side imbalance, buy side inefficiency, and the market trades all the way up into that, and boom, beautiful delivery of price. And then we have a little bit of a hiccup in here ahead of the crude oil inventories, and then huge displacement. Fair value gap, we have it from here to here. Watch what happens when we drop down into an hour, because this shaded area should be all the way up to here on an hourly. But watch what happens when we drop down to a 15-minute time frame. It's only this area here. You see that? You have one candle here with the previous candle's high and the next candle's low, that shaded area, and this candle went a little bit lower than this candle by a little bit, so that's why I redefined the fair value gap to this this low to this candle's high. So this is a BISI, buy side imbalance, sell side inefficiency. The market comes down, hits the very top of that fair value gap. Now zoom out so you can appreciate it more. Top of the fair value gap, boom, hits it. This is real support and resistance. Okay, it's not looking at old lows drawing a line out or old highs and drawing a line out. Because if it was that easy, folks, really, if it was that easy, nobody would be making courses because everybody would be able to trade. It would be just that simple, and it's not that simple. Now, this is that hourly SIBI, okay? All that big movement down. Watch what happens when we zoom in here. It's further refined, okay? I'm going to take the orange level off, or orange rectangle, and now we have this low to this high. That's the imbalance right in here. Look at the defined movement with the bodies right. I mean, look how well that's respecting that. It's beautiful. That is beautiful price action. Now we start meandering, going sideways. We have equal highs, bearish order block. Why is that a bearish order block? There's a fair value gap. It trades up into that and consolidates. Okay, we drop down, equal highs. That's the manipulation. We're going to drop into a 5-minute chart, and you'll see a lot more definition here. Equal highs. Here's that 10:30 window. So that open on that candle, we see price higher, higher. They slam it up in there on the heels of the crude oil inventory. Equal highs are blown out. Fair value gap, even on a 5-minute basis. Bearish order block. Spike through, buy side liquidity, taken, purged, runs lower, breaks the equal lows. Okay, what are you going to look for now if you want to trade it? A fair value gap. Where is it? I'm going to give you a second before I point it out, but where's the fair value gap at? After these lows are taken out and it blows through, where's the fair value gap? There's one here. You probably thought that this was one, and it really was. And you're probably saying, well, it didn't really fill it. Now keep looking. You have this candle. This candle's low, 62.31. The next candle, we have price delivery down to here. Then this candle's high is here. And then the next candle, right away, we could sell short because the range inside of this candle's body, this is institutional order flow. Okay? It's not supply and demand. It's ICT's baby. Market comes back up. IPTA will reprice to this level. It consolidates, gives them a little bit of time to get their orders in. I got mine in. Off to the races. Done. Done and dusted. Trades down to the top of the range here. I got out on this wick. I didn't get this. And it was over. Now, some of you are probably looking at this saying, man, I'm going to trade oil. Every week, there's a trade in oil. Just like there's a trade in foreign exchange. Just like there's a trade in every other asset class. Don't think just because it has a big move like this that you need to abandon ship. Don't follow euro. Don't follow cable. Just trade oil. Once you graduate to charter member status and you have shown 6 months of continuity and consistency, then you can trade whatever you want to trade. But until then, listen to me. Follow the process. Only focus on euro dollar, pound dollar, and the dollar index itself. Okay? Don't deviate and go into other things because it's just going to make it harder for you. Okay? Now, look at this before I close the video. We have this old low here. Now, this is one of those instances where price comes down. This is old support, so it should rally. It starts to rally, and then poof, out to bed. Falls right out of bed. Does it come back up and hit that as support turn resistance? No. But it does give you an ICT narrative. Think about that. Let me take this off for a second. I want you to really let that sink in. Let me put the horizontal line back on real quick. Boom. Look at that. Small little gap in here. Now, nobody else sees these things and talks about it. I mean, I am. And now everybody's talking about it on YouTube and everybody, I mean, it's a fair value gap. FVG. There's so much more than just that. But if you make your career on this with the proper narrative and institutional order flow, trading in the right bias, you don't need anything else. That's it. That's your career. Refining that. That's your setup. That is the thing that you're looking for. When you're looking at price action, you're studying this little thing right here I just outlined. That's enough. You can find that on any time frame, and that'll either spell 10 pips on a 1 minute chart, 20 pips on a 15-minute chart, 50 pips on an hourly chart, 100 pips on a 4-hour chart or more, a daily, couple hundred pips. Weekly, 500 to 1,000. Monthly, it gets silly. You're learning. It may not feel like it, but you're learning. And you're learning the most elite style of analysis in the financial sector. It's just nothing's like this. So I want to talk a little bit briefly and then close the video. I'm going to get a naked cable chart and go out to an hourly. Boom. And we'll zoom out a little bit. Just like I mentioned with the euro dollar, I'm not convinced that cable's dropping yet. Like we have a little bit of imbalance here. We have sell side liquidity pool resting below that low. We could come down and purge that, but I wouldn't be surprised if we go into that and then slam higher. This area right over here, fair value gap. I'm interested in that. Okay, I like that, and I think that will be enough. Now, if we hit that, then we might get a rejection and go lower, or slam through it. Either way, I'm expecting that as a potential run on liquidity because we have equal highs here. They've held it really, really tight. And even though I was able to trade inside this little bit of a sloppy movement, I think the larger move is going to happen tomorrow. And I'm not convinced that it's a down move. So I'm just very leery. I'm waiting. I'm going to anticipate tomorrow providing me more insight about what side of the marketplace they're going to run. But it's just, they have a high here, a lower high, a lower high, a lower high. To me, it just looks like they're just baiting it and engineering liquidity resting above here. And they could run that easily and then come down and close the fair value gap and then bounce down here. That's another scenario. Like it could run here, bang that, and then reject immediately and come back down and rebalance there. And that'll be the end of it. That's the week. But it's one of those things. FOMC, non-farm payroll, and like ECB rate announcements or any rate announcement, you're just guessing ahead of it until a little bit before you can generally see what they're probably going to run for. But I just outlined this based on what we have on the chart right now at 5:53 p.m. New York time. All right. So that, folks, is going to be it. I will chit-chat with you by way of abusing your Twitter alerts tomorrow. And until I talk to you then, I wish you good luck and good trading.